and then plot the OTE using the range outlined in the chart. In this next chart, we can see that price returns to the OTE into discount and reacts to the lowest level of the zone by touching it without closing below it. Right after, price begins to rise in the direction of the old high, swing high, or buy-side liquidity level. One major concept in the ICT method is the fair value gap. The fair value gap is a 3-candle pattern that hides a gap between the first and third candle's shadows. Let's first take a look at the bullish fair value gap, which is often called BC. BC simply stands for buy-side imbalance and sell-side inefficiency. The bullish fair value gap is a pattern where the upper shadow of the first candle doesn't overlap with the lower shadow of the third candle, creating a gap between the two. Let's make a quick comparison between price movements where we can find a fair value gap and one where we cannot. On the left, we can see that there is no overlap between the upper shadow of the first candle and the lower shadow of the third candle, therefore creating a fair value gap. On the right, we can see that the upper shadow of the first candle overlaps with the lower shadow of the third candle. In this case, there is no fair value gap. The bearish fair value gap is often called CB, which stands for sell-side imbalance and buy-side inefficiency.